Good afternoon, everyone. Welcome to our first webinar of 2026. My name is Alina Gilbert. I'll be presenting today, and I want to wish everyone a very, very happy new year. Hopefully, 2026 will be a better year than 2025. But where does the time go? Oh my gosh, it seems like we were just doing this for 2024. All right. Well, today we're going to do our year in review webinar. What have we learned from 2025? And let's do some housekeeping. I thought this meme was hilarious. Hopefully it doesn't offend anyone. But in front of you, the bulk of your screen should be the PowerPoint presentation. So you should be seeing this funny meme. And to the left is your presenter, who is me. Hello. We are actually to the right. Let's go to the right of the screen now. There's a little chat icon in there. That's where you can go to type in questions you have. I will be saving questions for the end to make sure we have enough time to get through all the materials. And then I'll go through as many questions as I can at the end. If you're having any audio or any video problems during the presentation, there is a little icon at the bottom that says audio or video problems. Go ahead and click on that, and it takes you through a few steps that hopefully fix the problem for you. This class is going to give you 1 CMCA credit, and you will get that emailed to you typically within 24 hours of the class. One thing to be very careful about is the image in the email of your certificate. You have to save it because it goes away after 30 days. It just disappears magically. So you can just right click on it and save it as a photo to make it easy so that you can print it out anytime you need to. As a reminder, we are recording today's presentation and it will be posted on our YouTube channel. So if you find this presentation like super fun and super amazing and you just want to recommend that everybody go watch it, it'll be on the YouTube channel. You just can't get credit for it if you're watching it on the YouTube channel. And finally, last but not least, we do have our little survey that pops up at the end of the presentation, as most of you know who have done this. I always ask that if you have the time and the inclination to please fill it out. It really helps us when we start working on next year's presentations as well as, later on this year. So please fill it out, and it would really help us. So without further ado, let us get started. So the first part of these year in review presentations is always, what did you think of the prior year? And with these issues, I kind of go to different, I go to attorneys in our office, I go to staff, I go to some managers, and I ask them, what did you think of 2025? Give me the positives and the negatives. So these are the negatives, and these are really things that people gave me. So legislation seems generally hostile towards associations. Yes, we know that was the case. Higher turnover in the industry, the too much use of AI, and I think this is one we're going to see a lot of. It's not a substitute for thinking. So people are already seeing some frustrations with others who use AI and don't proofread it or don't check to make sure that what it's saying is actually correct. So I think we're just at the tip of the iceberg with AI. People continue to be impatient and litigious. Too much ignorance. In-person meetings are coming back. So those are the negatives. And let's see what people said for the positives. They said owners are becoming more involved, and maybe that's through yelling and screaming, I don't know. People are becoming more efficient working in a hybrid remote environment. So I tend to agree with that. I think, a lot of us are working from home at least some of the time. And there's something to be said about being able to sit in your pajamas and work and snuggle up with a puppy or a cat or whatever you happen to snuggle up with, a pillow. That's definitely, I think, preferable to sitting in an office. Boards are becoming more aware and tuned into legislation and changes in the law. Hopefully, I think there's enough stuff getting blasted out with all the legislation that the boards hopefully are getting most of it and reading it. CTA is gone. Woohoo! And in-person meetings are returning. So that's both a positive and a negative, depending on who you ask. All right, so those were the positives and the negatives for 2025. So let's talk about some things that we have learned next. Association's ability to collect delinquent assessments has a target on its back. I think we can all agree that over the last few years, we're seeing more and more legislation that targets the collection process, also the foreclosure process, and it's making our life much more difficult. We're having to update collection policies almost on an annual basis. There are additional processes that keep being added that makes the process itself very complicated, and it's almost like, if you're a self-managed association, you can't comply with it because it's just so convoluted and has so much things that you have to do. We're seeing legislation impacting legal fees and capping legal fees that associations can recover when it comes to their collection actions. But my one but is we did get some clarification with respect to delivery of the delinquency notices. If you all recall back last year, we were concerned because when you send out the notice, the initial notice of delinquency, you have to send it out by certified mail, and then 2 of the 3 other methods, which is either a phone call, an email, or a voicemail. So, and people were concerned. What if we don't have an email address? What if we don't have a phone number? And that was a serious concern. And so that got clarified in last year's legislation to where it said if we were not provided with an email or a phone number, then the association can substitute that by sending something out regular mail, in addition to, of course, the certified mail. So they did give us some clarification on at least one confusing topic. So that was actually a good thing, but the rest of it was not so great. So we'll just have to wait and see what happens this year. What else have we learned? Recall meetings are all the rage. I don't know about you all out there, but I have seen far more recall meetings in 2025 than I had in the last few years, or maybe even all years I've been practicing. It seemed like we were having at least 1 or 2 a month that we were having to attend. And why? I don't know. That we're seeing more also successful recalls, which is a little scary. In the past, when we attended recall meetings, I would say 80 to 90% of them, the recalls failed. And this time around, I'm going to say it's almost like a maybe 60-40 split. So I'm seeing more attempts at recall succeeding. I'm seeing more hostility towards board members, right? People are yelling and screaming. People are calling them names. People are accusing them of doing things, and there's just a lot of hostility there. And I think ultimately it, of course, comes not just from the board, but it's easy to focus our anger about other things that may be going on in the world towards the board. It's easy. We're seeing more hostility from board members. So I'm seeing more boards like at meetings kind of exploding and yelling at homeowners and going off on the homeowners for certain things, and it ends up being like a screaming match. So I think with those types of things being very commonplace, unfortunately, homeowners are getting upset with their boards, and they are trying to recall the board. Nobody wants to get yelled at. But for some reason, it seems okay for owners to yell at board members, but not the other way around. The other thing I'm seeing is much more hostility and much less understanding from prior board members, people who were on the board, who know what it's like to be on the board, and then they get off the board and they become those homeowners that torment the board. Have you guys seen that? Because I have seen that in a lot of communities this past year. And it seems that the prior board members don't always seem to understand or remember at least what it was like to be on the board and the scrutiny they were under and how they wish that people would be more understanding and ask more questions instead of accusing them. But that seems to go out the window these days, and they just don't seem to remember. So all of this, I think, breeds recall meetings. And like I said, they're happening much more often, although I hope we see less of them in 2026. I really do. Insurance costs, they're still going up, but the good news is they are going up at a much slower pace than they have in the past. So it's kind of like, the silver lining here is they've slowed down in going up. And, we talked about this. We have whole classes on insurance and insurance costs. But where are they going up? The wind hail deductibles actually seem to have paused for now. Now, as a just quick history lesson here, if you've been in the industry for over like 20 years, you might remember back to the time in the early 2000s when it was pretty common to see just a dollar amount as your wind hail deductible, like a $10,000, $15,000 deductible. And then they started going up and becoming more of based on a percentage of the value of the property that's being insured. And at first we saw like 1%, 2%, and that seemed really high to us. And then we started seeing it go up to 5% and then 10%. So right now, 10% is pretty common. Sometimes it's a little higher than that. And that is almost like self-insuring. But the good news is that I haven't seen a whole lot of policies up their deductible for the wind hail claims, at least. We're seeing premiums go up, like I said before, although, again, they are going up at a slower rate. So what are the factors in all of this? Well, let me talk about something else real quick. One issue is that, as you all know, we live in a state that has both lots of wind and hail claims and a lot of wildfire claims. It's a double whammy for us. And insurers, a lot of them don't want to take the risk because we're in the top 3 states for both types of claims. Okay, so insurers are losing a lot of money on us. And a lot of them are leaving they're leaving the state. And what happens is when we don't have a lot of insurers, in the state providing coverage, associations end up having to go to secondary lines, which could give you a lot of coverage. The only problem is they're much more expensive. So that's one of the reasons we are seeing the increase in insurance premiums. But the other things that also have an impact, regardless of who you insure through, are, first of all, the type of community, right? Are you a condominium community or are you a townhome community? Maybe you're a single-family home community. Those are all very different in what gets insured by the association versus the homeowners. So the type of community definitely has an impact on the cost. The other issue is, where's your community located? Again, big difference if we're here in the Denver metro area versus we're out in the mountains where there's a lot more trees and a lot more fire hazard. Deferred maintenance is another big one. There are a lot of associations who have tons of deferred maintenance. They're trying to save money, so they're holding off on certain maintenance and repairs. And insurance companies, they look at that, and that also really impacts as to whether or not they're willing to insure a community, but also the cost at which they're willing to insure. Because the higher the risk for the insurance company that you're going to have a claim, the higher you will see your premiums go. Grills, that's a big thing, right? We see a lot of insurers come in and they say, hey, you have to prohibit grills on the balconies or we might not insure you next year, which actually, I've had this question come up a few times talking with managers and some board members, in that they have had insurance representatives come to their communities to inspect, and they have said, hey, if you want to keep the insurance you have, you're going to need to do X, Y, and Z. And whether it's you're going to have to prohibit grills on balconies, you're going to have to update the electrical wiring, whatever it is, they set these conditions. And the question is, well, can they do that? And the answer is yes. They're the ones providing the policy. I mean, they can't terminate you midstream, but they can terminate you at the end of the billing, the insurance period. So if you are faced with an insurer coming to you saying, you need to do these things if you want to keep us, my recommendation is you either do those things, or if you don't want to do those things, start looking for another insurer, which will likely be a secondary line of coverage for more money. Okay, but they can do that, and they are doing that. Aluminum wiring, like I just said, older communities tend to have aluminum wiring, which is considered a fire hazard. Polybutylene pipes, also from older communities, those have defects, and a lot of times the insurers are going to ask you to do something with that, replace that, better piping, which, as we all know, is a lot of money. And ultimately, using an HOA specialist broker will ultimately get you better results as well. Now, I say this every time I talk about insurance, but I think it's very, very important that you, as a community, use an HOA specialist, because there are a lot of property insurers out there. There's a lot of brokers out there. And HOA insurance is very much a niche. It's kind of like there's a lot of attorneys out there. They don't all specialize in HOAs. In fact, most of them don't. And when they try to mess with HOA issues, they just don't have the knowledge or the experience to know what's going to happen or what needs to happen or what could happen. And it's the same thing with our HOA brokers. I will tell you, there's only a handful of them in the state. And all of them are going to tell you, oh yeah, I understand HOA coverage, but that may or may not be correct. If you are not sure whether you're working with someone who is an HOA specialist, or you would like recommendations, please email me. You'll see my email at the very last slide, and you're welcome to email me. I'm happy to send you some names. And you can also look like in the CAI directory, because you're going to see those insurance brokers listed there as well. So you can, do either or. So again, insurance still going up, but slowing down. So maybe next year we can get to the point where we can say, hey, it stopped going up. Wouldn't that be amazing? And then, hey, it started going down. So fingers crossed, let's hope. What else have we learned? Yes, people still suck. And that is my legal opinion. People still suck. We already talked about this with the recall meetings, but it seems that we have lost a little bit of our civility. In fact, I would say we've lost a lot of our civility these days. We're seeing people yelling and screaming. We're seeing name calling. We're seeing homeowners sending out these mass mailings to other homeowners, basically accusing boards of stealing money, embezzlement, of using funds for improper purposes. And kind of the sad thing about that is that most of these folks who are doing it are not actually really doing their due diligence to figure out exactly what's happening with the money. They don't like that their assessments are high, or they don't like something they've seen on the budgets. And instead of trying to get more information about that, they make a lot of assumptions, which are typically incorrect, and start kind of throwing shade out there for the board. And this is really where our problems start. And honestly, I feel like there's no respect out there for anyone. Nobody's respecting the board members. I don't feel like they're respecting the managers, and I suspect you'd agree with me on that. Half the time they don't respect the attorneys or the other professionals who deal with HOAs day in and day out because they're not hearing what they want to hear. And so then they make the assumption that obviously that has to be the wrong opinion. And they get very angry. And again, I really feel that a lot of this anger is rooted in something outside the HOA world. It's just our world in general and all the things that we have going on. And people are angry. And I think this is an easy scapegoat for people to use. So they do still suck, unfortunately. All right, what else have we learned? Trying to save money by not using experts is not okay. It's not okay. But I've seen it a lot in the last year, quite a bit. And maybe it's because prices are going up for everything. Insurance is going up. Construction's going up. Landscape care is going up. The prices are going up everywhere. Yes, it's becoming much more difficult and much more expensive to live. And there are a lot of boards who think that we're not going to raise assessments. We can't raise assessments, so therefore we're going to bypass something. And what they bypass is their experts. And it's not just attorneys. I'm not just talking about attorneys. I'm talking about engineers. I'm talking about CPAs. I'm talking about insurance brokers. I mean, any and all experts that you would consult with. Well, here's kind of my reason why I would never recommend an association save money in this manner. And that is because the nonprofit code in Colorado has a really nice provision in it. For once, right? Statute is a nice provision. And that provision is one that protects our boards from liability if they rely on the opinion of an expert. Now, obviously, it has to be an expert in the field. We have to, if it's someone who's not an expert and we have reason to know they're not an expert, that's not going to count. So let's say there are building problems and we don't know what's going on. Instead of having our handyman go out there and say, yeah, I think it's this or that, it would probably be more appropriate to pay an engineer to go out to do an inspection to provide us with a written report. A handyman is not typically going to be looked at as an expert when it comes to structural type issues. That's going to be an engineer. So you go, you get an engineer, the engineer says, here are my findings, here are my recommendations. And the association follows those recommendations. They're going to be protected from liability, even if that engineer was completely wrong in his opinion, even if he screwed up completely. Now, I'm not saying the association can't get sued or the board members can't get sued. We can't stop people from filing lawsuits. But ultimately, the evidence will be presented to a judge saying, hey, we got this opinion, we followed it, judge. And the judge is going to say, okay, you did what you could and you're protected by the statute. So I would think that for board members, one of your primary concerns should be to protect yourself from exposure to liability. You're not getting paid most of the time to do this job. So even if we double your salary, you're still not getting paid. And you are a volunteer, and it's certainly not worth it, in my opinion, to put yourself out there and expose yourself to liability because you're trying to save money and save money in an inappropriate way, I would say. Okay, what are some other examples we have of trying to save money? Well, I've seen associations prepare their own voting documents, like when they're doing amendments or if they're doing elections by mail. And unfortunately, no matter how much they think they know, eventually it comes to us, hey, can you record this amendment? And well, let me see what you've done. Let me see what you've sent. And we look at the voting documents and something's missing. Guess what? Boards aren't thrilled to hear us say, or any attorney say, you got to redo the whole thing because you missed something. That's more money for them, more mailing costs. They gotta go do it all over again and explain why they have to do it again. And it just doesn't look good and it's expensive. So ultimately, saving money by preparing your own voting documents is not going to be the way to do it to save money. It's not, because you're going to end up spending more money in the long run. I've seen associations prepare their own policies and amendments, and yet then get upset when we tell them, hey, these don't comply with the statute. We need to redraft them for you because there's too much stuff in there for us, to just tell you verbally, these are all the things you need to have in there. There's just too much. Okay. And this one we already touched upon, making repairs without consulting experts. We just talked about that. If you make a repair based on what the handyman says and it's a structural issue, and you do it wrong and things go badly, you're not going to be absolved from liability as a board. If a homeowner sues saying you did not do your due diligence with respect to what the problems were before trying to go out there and fix them, they're going to have a good case against you. Okay. Another one is refusing to submit an insurance claim and not consulting with it. That probably doesn't read right, without consulting an attorney. Ultimately, there are a lot of situations where boards assume that, hey, the homeowner caused the damage, they were negligent, it was their fault, whatever it is, so we wouldn't submit a claim for that. And 80% of the time that's wrong, because insurance isn't based on negligence. It's for negligence. It's coverage for people's stupidity, right? So like I said, we do whole classes talking about submittal of insurance claims and the analysis on that. But most of the time, when you're saying we're not submitting it because the homeowner did something, that's going to be the wrong answer. I would always recommend consulting the association's attorney. You can consult the insurance broker, but if it comes down to a legal analysis, it's going to have to be the attorney who looks at it. So again, saving money is great. Trying to save money is great, but don't do it in this way. Don't do it by skipping the part where the board conducts its due diligence and gets some expert opinions on things, or sometimes the experts actually have to do the things, right? So that's another thing we learned. All right, here's the next leg of our presentation, and that is what worked last year, what didn't work last year. So let's see what worked. Well, updating declarations to shift the hazard insurance to owners, same thing as property insurance. So it worked. Associations went to their homeowners, they presented amendments shifting the insurance obligations to homeowners individually, and they got those approved, and it made life easier for them. I mean, there's always kind of the pros and cons of this type of situation where, if the homeowners have to insure their structures and there's a common roof, there's going to be some difficulty there if the entire roof needs to be replaced. There's always concerns, what if my neighbor is underinsured? Those are realistic concerns. So that's out there. But ultimately, if we are looking at a way to save money as an association and your premiums are out of control, that's certainly one way that associations have utilized to be able to save on their premiums, is to shift some, if not all, of the insurance obligations to their homeowners. What else has worked? Dotting your I's and crossing your T's when it comes to association actions. Unfortunately, we live in a state where most judges do not like HOAs and are not favorable to them. That it follows kind of the legislative pattern. And so what happens is we find that judges will use any excuse they can, any technicality to rule against an association. So, a lot of times people say, I substantially complied. And, that might be okay in some states. It's not okay in Colorado because, again, we've got the judicial system working against us anyway. Judges don't like us. And so we don't dot our I, we don't cross our T. There's a reason for the judge to say, nope, throwing this out. Sorry, HOA, I'm not ruling in your favor. So I think it's really important. And just a couple of examples in here is the collection demand letters, specifically what's in them and how they are delivered, super important. In fact, I just was witness to an email exchange between our debt recovery department and a manager where the manager kept wanting to turn over a collection account, and we had to keep sending it back saying, your letter doesn't contain everything it needs to contain. And she said, but I added stuff. So she drafted her own letter. Instead of using like the sample one that we give out with our policy, she drafted her own. And it didn't have everything. And so she kept sending it to us, and we had to keep sending it back. And she was getting very frustrated. But for some reason, she wanted to use her own letter. And so that letter did not dot the I's or cross the T's. So we had to keep sending it back. Very frustrating, and I get it. Sometimes associations have to obtain owner approval to do certain things. And like I said before, it doesn't work to put together your own voting packets because you're not going to be dotting your I's and crossing your T's because there are some very, very specific statutory requirements with respect to that action. Board decisions. I'm seeing a lot of board decisions that are not being documented. They're not in the minutes. They're not in an email exchange that's being saved. And homeowners are calling boards on this. So when associations are documenting, when you're making decisions at a meeting, that's what works. It's in your minutes. That always helps. So dot your I's and cross your T's because that absolutely helps your community in the long run should we encounter any pushback to anything. We just talked about the experts, right? Consulting with and following advice of experts. It does help. It does work. Ensuring the community has a deductible policy. You know, it always seems to go back to insurance. I feel like insurance is like this core of not evil, but problems, you know? Let me talk a little bit about a deductible policy. What we're seeing as a pattern right now is our deductibles are pretty high these days, right? Because we're trying to save on costs. And what ends up happening is you'll have a community that has, say, a $25,000 deductible. That's not even that high, right? We're seeing much higher deductibles. But as an example, we have a community that has a $25,000 deductible, and it insures the structure of a townhome. And there is some sort of an incident that constitutes, you know, an insurable claim, but the damage is less than $25,000. So as an association, you would not submit a claim in that case, right? Because it's below the deductible. Now, in the past, we would say, so this automatically now shifts to the homeowner because the homeowner has the maintenance responsibility. But what's happening is those homeowners now are submitting claims to their private carriers. Their private carriers are paying out, and then they're going after the association on the basis that this is an insurance claim, this isn't a maintenance issue, and you are required to insure, and therefore you need to pay this. Of course, the response is, well, we're required to insure, but this was less than the deductible, and that's not flying. And so if an association has a deductible policy that spells out how the deductibles are going to be allocated if there's a claim or there's not a claim, that is the only thing that's really helping associations get through this. So it has to be very clearly spelled out. So for example, there's different ways to do it. The association will pay the deductible if it's repairs to a common element. The owner will pay the deductible when it's the unit that's damaged. That's very simple, right? But if you don't have that kind of a policy, if the unit gets damaged and the association insures the unit, you are going to have the homeowner's insurer coming after you wanting their money back. And their position is, again, you insure it, you have to pay the deductible unless there's something out there saying you don't. And the policy is the one thing that's out there they can say, we don't have to do it. Obviously, you're going to check your governing documents, make sure those documents don't speak to deductible allocations, and if they don't, then we do a policy. It's also important to know that if you're working with a post-Kiowa community, so post-July 1, 1992, your community is created after that date, there is some language in Kiowa that implies very strongly that when there's an insurance claim, the association is supposed to pay everything unless it has a deductible policy. And we don't want anyone making that argument. And so there is really no downside, as far as I'm concerned, to associations having a deductible policy. So if you don't have one, I really, really, really recommend you talk to whoever you go through for legal advice and talk about getting a deductible policy in place, because that will protect you. What else has worked? Board members without personal agendas. I know I think in 99% of the time, the people who come on the board, you want to help your community, you want to contribute. As an owner, you want your community to be a thriving community with high property values. You're in there to make it a better place to live. But every so often, we have those bad apples, right, that come on the board because they're upset that their floors didn't get repaired last year. Their best friend, their neighbor, is upset about something and wants retribution, and they have people getting on the board. We do see it. Obviously, what works is when people come on the board without those kinds of agendas, and they are there generally for the good of the association. All right, we're going to talk about what didn't work now. Decisions and outbursts based on emotion. There's a lot of talk in this presentation about people being jerks, about people yelling and screaming, about people being uncivilized. I'm sure it is no surprise to all of you that anytime we have a board making a decision based on emotional issues versus logic behind the situation, or anytime we see outbursts, it could be by board members, it could be by homeowners, it could be by a manager, it could be by an attorney, it could be anyone. Those do not work to the benefit of an association. Okay, and a lot of times those outbursts are warranted, those feelings, those emotions are warranted, but ultimately it doesn't help the association if they are acted upon. So there's been a lot of that this past year, especially at recall meetings, right? I was at a meeting, it was a couple months ago, I think, and it was a recall meeting, and we were at the part where the board members got to say their piece before the vote occurred. And so the board president was up there talking about stuff, and he had this long presentation, but ultimately there was a homeowner sitting in the front, and all of a sudden the board member starts yelling and saying, don't smirk at me, don't roll your eyes at me. And then, of course, that owner then yelled back at the board member, and it just became this huge, not everybody got involved. It was the mob mentality. Everybody started yelling at one another. And that just did not help. That did not help the situation at all. It certainly didn't help the board keep their seats, because they did not. So it was a bad situation. And that was like one of the reasons why I think people called the recall meeting as well. So it doesn't help the situation, even if it does help you feel a little bit better. But although ultimately when you yell and scream, I don't think it really does help you feel better in the end. Trying to save money by doing it yourself. All right, we talked about this, right? Especially if you're trying to do legal work yourself, don't do it. Just like you wouldn't yourself go and try to fix the structural components of a building, even though you might be an engineer or a construction worker. You wouldn't go and do it, you would hire someone. Same thing. Don't try to save money by doing things yourself, even if you think you know how to do it. Not always, 99% of the time, it ends up going very badly. So don't do that. Not consulting experts, another recurring theme in this presentation. Consult your experts, protect yourself from liability. Then not following expert advice. So maybe you've consulted with an engineer, but the engineer says, this is what I'm recommending, and the board says, nah. For whatever reason. Nah, we don't want to spend the money. Nah, we don't agree. Or we don't want to do it. Whatever the reason is, if you get expert advice and you're not taking it, that could very well work against you should we end up in front of a judge. Now, don't get me wrong. There's always going to be appropriate situations where you don't take advice from an expert. One of those would be if the recommendation is prohibitively expensive. We don't have $2 million. We cannot borrow $2 million to do what needs to be done. So maybe there is a temporary fix while we try to budget for more fixes next year. That's okay. I think that is reasonable. But it can't be we're not taking advice of the expert because we don't like it. I cannot tell you how many opinions this year I have drafted where I've said you need to do X, Y, and Z, and the board came back and said, you're wrong. Not because they knew better, but because they didn't want that to be the answer. So again, be careful. And if you don't agree with something one expert is telling you, at least get a second opinion, even though it's going to cost you more money, because if you can get another expert at least to agree with your position, then that can help protect you. Okay. Attempting to collect without updating the collection policy. Well, ultimately, the answer is you can't collect without an updated collection policy. We've had plenty of situations where associations tried to send over collection matters that we had to turn away because we don't have a copy of your updated collection policy because there have been more changes. So that does not work. Not using an insurance broker who specializes in HOA coverage. We talked about this, why that's not a good thing. And not taking recall meetings seriously. Again, they are all the rage right now. And I have had boards who are like, they're never going to remove us. We'll call the meeting, whatever. We're not going to do anything. Meanwhile, the homeowners go out and they get all the proxies and they have enough proxies to vote someone off the board. I think you should take those seriously. I think, like I said, homeowners, everyone's on edge and any little thing can set people off. So don't assume everything's going to be fine and dandy. You need to really take some control of situations when you're getting requests for recall meetings. All right, so those are all the things that did not work. And then we had predictions. In 2024 or early 2025, we made some predictions for what would happen. So let's see if we were right. Looks like we were right on some. So one was more document revisions pushing insurance obligations to owners. We did see that. So we did see more of that. I think that was a correct prediction. HOAs are exempted from CTA. That's not exactly what happened. The CTA just went away, right? So sort of the end result was correct, but not the reason. HOAs are forced to comply with CTA. So that's a big no. That did not happen, thank goodness. Then there was a prediction of an increase in turnover of board members and managers. People are sick of being treated badly. I agree that people are sick of being treated badly, but I personally have not seen that much turnover short of the recall meetings where, you get new boards on. I don't think I've seen more in 2025 than I've seen in recent years. So I don't think this really happened personally. Increase in virtual meetings? Nah, not really. In fact, remember we said we're seeing more in-person meetings coming back. So not really on that one. Legislation. We predicted there'd be some reserve funding legislation. Thank God that was wrong. Additional collection requirements. We saw those, and you have to rewrite your policy and update your demand letters, and of course additional foreclosure requirements as well. All of that was set forth in the collection policy, as well as the letter, the collection letter for foreclosure purposes. So yes, those were, the bottom two were correct. The reserve funding was not. But now let's talk about what we think is going to happen this year. You guys ready for this? All right, let's see what we think. Less HOA legislation than in prior years. That was someone's, again, these are all things I ask people. I don't know, personally, I'm kind of struggling with that one. I tend to think we're going to see at least as much legislation, but some folks predict that we're going to see less. We're going to see more complications due to use of AI. I completely agree with that. And it's not just, you know, homeowners using AI or board members using AI. I see attorneys using AI, and it scares me because AI has not been perfected to the point where I think it is appropriate to use by attorneys. A lot of attorneys, of course, disagree with me, but I think we're going to see complications because people are going to start relying on AI, and they're not going to proofread. They're not going to make sure everything that AI puts out there is accurate, and there's going to be perhaps some liability exposure over that. So that's a prediction that we're going to see some complications as the use of AI increases. Prediction that we're going to see an increase in owner anger and recall meetings, so even more than 2025. I hope that's not true. There is also a prediction that we are going to see continued efforts to amend covenants and shift insurance obligations. We'll see. We'll see when we all get back together in January of 27. Oh my God. We're going to go through all of this and see what came through. More governance policy rewrites and updates. Well, we've been updating our collection policies. We on and off update our enforcement policy. Are we going to have to update anything else? We'll see. And of course, the prediction that we are going to see more legislation targeting what? Collections, reserve funding. Again, there's always threats out there that we're going to update KIWA to require associations to be fully funded, which you guys all know is not really feasible in the general scheme of things, not unless you want your homeowners to pay way, way, way more money. And still, even then, it's almost impossible to sustain. So hopefully we don't see a whole lot of legislation on that, but it keeps being threatened. And then legislation just targeting HOAs in general. I mean, there's threats every so often of we're going to rewrite all of KIWA. Again, hope that doesn't happen. But just more HOA legislation in general. So those are our predictions for this year. I hope that a lot of these do not come true, but we will just have to wait and see. So with that in mind, this is my kind of lady. I will make it to the gym with her. So I have questions. We've got 12 minutes. I'm going to see if I can get through all of this. Let's see. All right. How are you seeing AI as being used that is negative? Well, I think I just talked about that, right? It's like I said, I'm seeing it used by some attorneys who are not proofreading it, and they end up sending out things that are just not correct legally. I'm seeing it used by board members to generate letters, and those letters are not accurate as well because they cite to the statute and their citations are completely wrong. So I'm kind of seeing that all over the place. Let's see, what about? Oh, this is a good question. What about FDMC or FLMC requirements to be no more than 5% wind hail if 10% is typical? It sometimes comes into play when homeowners are buying and selling, and sometimes it gets overlooked. I have seen sales fall through, so that's Freddie Mac, Fannie Mae. The guidelines right now say you have to have wind hail coverage, right? And if they don't want it to be more than 5% of the property value, which isn't feasible, at least not, usually in Colorado. And I am seeing it impact some sales. However, there are, I think, some banks that kind of look the other way and don't even mention it. So, but yeah, that's important to be aware that that is something that could happen. With a 10% wind hail policies are starting to cause this is the same thing. Mortgage companies, especially for FHA, not willing to lend money. Correct, it is. This is impacting sales of condo associations. Yes, it is. Will legislation revisit this in light of the affordable housing shortage in cities and towns? Great question. Honestly, I don't know. I just don't know. I would hope they would, or I would hope that maybe deductibles for wind hail maybe can start coming down a little bit. But ultimately, I don't know. There's nothing out there. Just so you know, I am going to CII Law Seminar next week in San Diego, and I think there are going to be some discussions about this issue. So maybe email me the week after that, and I can download whatever I find out to you. All right. Does the rental ratio affect the insurance premium? It typically will not impact insurance premium, but it does impact people's ability to get loans to purchase in the community. Right now, the percentage FHA is 50%, VA is 45%. So those are kind of right now the thresholds for rentals with respect to financing. Where can we get a list of HOA specialist insurance brokers? Well, like I said, if you're a CAI member, you can go to the CAI Online Rocky Mountain chapter directory, and I think they have a whole bunch of insurance professionals listed there. You are always welcome to email me. Here's my email address is right there. And I'm happy to send a few names and contact information your way. The other question is, what is the CTA? CTA is Corporate Transparency Act. It was a federal law that they were trying to get on the books that would require not just association, but all corporations in Colorado to register and submit certain information, more specifically information about, like, each individual board member had to submit information about themselves, including a photo of their driver's license and things like that, which really upset people. And a lot of people claim that I'm not going to be on the board if I have to do all of this. So it was just this big, huge brouhaha. Next, how are you handling collection costs since the state now regulates 50% of the legal expenses can be charged? It's not, the state does not regulate what can be charged. What it regulates is what a court will award to the association. So that doesn't mean the association doesn't get charged the full legal fees. Law firms are still charging their fees. The risk is you may not be able to recoup all of the legal fees, even if you prevail in a collection action. So that's really what's being covered. It's not how much attorneys can charge, it's how much associations can get awarded to them at the end of the proceedings. Let's see. Sorry. How can we replay this webinar or get a transcript? So this is being recorded. We have a YouTube channel. You can access it through our website. And all our kind of lunchtime classes are downloaded, and you can watch any one of them anytime you want. So that's how you can do that. I think last call for questions. Otherwise, we are going to get out of here 5 minutes early today. All right, all. Thank you for joining me. I'll see you in a couple weeks when I do the next one. It'll be fun.